Most business owners think that their accountant has their finances covered, but there's an important distinction that you need to make as a business owner to realize: is your accountant doing absolutely everything for you, or are there limitations to what they can actually do, and you probably need to look at other professionals? Traditionally, accountants are backwards looking. They are looking at the previous financial year and what actually occurred with yourself, your family, and your business. Then they look at ways to save you tax. They are the historians of your past financial year or your financial life. Well, what's the difference between an accountant and a financial advisor? Well, a financial advisor looks at where you are today and where you want to go, whether it be 3, 5, 10 years, or even retirement. We look at it from your personal situation, your family dynamic, your entities, and your business. Financial advisors then look at the different strategies that we can use to take you from point A, where you are, to point B, where you need to be. And this can be in a number of different ways. It can be relating to your assets and liabilities, superannuation, estate planning, life insurance, tax planning, asset protection. The list goes on. And a lot of the time it involves utilizing overlapping fields and overlapping strategies, which means you need to bring in other professionals like an accountant or an estate planning solicitor or a life insurance advisor. Now, here's the problem that I keep seeing people run into. Whilst financial advisors and accountants have both gone to university, most likely both done master's degrees, and have knowledge in similar areas, there needs to be a clear delineation between the accountant's role looking backwards and the advisor's role looking forwards. A great financial advisor can have these conversations with you early, potentially even a year in advance, or at the very latest 3 months, and look at your business or your personal financial situation and look at what you can do better, identify those gaps, bring in the right people, or provide the right advice to plug those holes and to make your situation 1% better. I keep hearing from people, well, what's the benefit of having a financial advisor if I can just buy an index fund? Well, anyone can buy an index fund, but financial advice involves looking at your entire chessboard from a different perspective, all the different pieces on your board, and what is the individual strategy for each of those pieces, but also what's the collective strategy to take you from A to B. The value in advice isn't always the statement of advice or the index-based strategy. It is about stopping you from making the mistakes that you haven't made yet.